Okay, let's get our links going while we do this. Get this, get this, get this. It's live. Okay, I do hear the sound, so I know that's working. Copy my link here. Boom. Just curious if that... Alright, let's get this puppy rolling. Let's get this off there. Nope, not full screen. We want the Twitch stream. There we go. What's going on, investors? Dest here from Investments. And today we got a fun little stream because we're going to start talking about some of the trades that we've made that were actually in profit, right? So there's been a couple that we've been analyzing over the past couple weeks where we were assessing what's going on with these. And guess what? A couple of these are playing out exactly like we charted, and that's exactly what you want to see. So fantastic, right? Just really cool to see that happen. When you see something before it happens, you chart it out, and then boom, it happens, right? Like, doesn't get much better than that. Turn the volume down on my stream here. You might notice I've been gone for like a week, maybe a little bit more. Completely destroyed my computer. Reset up my desk, so everything's looking good now. I got this fancy little stand-up desk, like ooh, motorized, so fantastic. Anyways, let's get into this. So as always, we're going to look at some stocks, we're going to look at some cryptos today, and we're going to do some technical analysis on these charts and see what we can see if we can identify any patterns, see if we can take any actions to make some money. Obviously our goal here is to make a little bit of money. Trading is a tool in my toolbox on my road to financial independence. So very important that I keep that tool up to date, and this helps me do this. I'm trying to stream every 3 days a week and just want to use this time to vocalize some of the ideas, make them materialize in my head a little bit more, and it just helps solidify the ideas that you have. So we're going to start off with one that has been playing out exactly like we charted it. And I had a personal interest in this one because I used to work for GE Healthcare. So we're gonna zoom out of here and I'm gonna show you the pattern that we identified and the reason why this is playing out so well. So there's a couple things that took action on this chart. So we're looking at GE, we're looking at the weekly chart. And what we noticed is that there was a key area that was being retested on June, May of 2020, right? And that area at $36.61 correlated with multiple tests. The biggest one being this pullback that happened on March of 09. But then it also correlated to another retest of October 1992. It's a very, very long time ago. Just a very important low level that when you see it, it's actually taking off. Like, look at the last time you touched this level in 1992, you touched it as support, meaning you came down and you kind of like, you know, hit the top of the trampoline before bouncing higher, right? And look at that run you had since then, right? So massive run. Then after all that played out, you had a nice pullback, and where did it turn around? Turned around right at that same level and had a little bit of a reversal before pulling back down even further. And what are we doing right now? Well, we hit that same level in July of 2020. Very important. But then we also identified a important pattern here where we were looking at and we saw an inverse head and shoulders, right? So you have a neck followed by a head that's lower than the neck, followed by another shoulder. I'm sorry. You have a shoulder followed by a head, followed by another shoulder, right? And then your neckline is where your shoulder meets your head and your other shoulder. So approximately right here, we were calling it. And the way you would do your measured move is you take from your neckline to the top of your head and you copy that and paste it on the breakout of the neckline. So as this was breaking above this red line, this is your potential gain, and you're looking at about 57% gain, which is fantastic. Like that's the kind of stuff you want to identify and capitalize on, because that's exactly the kind of things you can do with technical analysis. Looking at these charts, you can visually see like, hey, I have a potential for a 57% gain. Do I want to take that chance? Well, on this, yes, because you can see there's that potential gain of 57%. And then if it were to break below, what the hell? We're getting commercials in our stream. Sorry, guys. And if it were to break below that red line, then you would stop yourself out, right? Or you would put a stop loss in there to get yourself out of that trade. So, risk reward. Do you want to take the trade or not? We decided to take the trade, and we were preemptive because my previous engagement with GE, but that is okay. So what are we looking at? Well, we're looking at a 57% gain potentially, but we were saying that it really correlates to this yellow line. So there's another stacking principle that we're identifying here. So we're identifying this orange line as well. And why is this orange line important? Well, when it pulled back from its all-time high in January of 03, this is the level that it hit, right? So we're just saying that there is probably some importance to that level at $130. Another thing is, well, you had a little bit of price action back in 97 on your way up to that all-time high. The more touches you see along a horizontal line, the more significance that line has. So I think realistically, we could see 130 be hit. That's where you'd want to take your profits, right? That would be ideal. But then we were also identifying that you have this green sloping line, that maybe this isn't going to be the reversal that is going to take this to all-time highs or even past $200 or $250, but maybe you'll come up to this green line, get a little extra bit on top of that $130, and then maybe fall back down to retest this, and maybe you'll get like a nice wedge forming in here because it's already kind of forming, right? Either way, this trade is played out. We caught it, identified it. It's working out really well. And we caught it on the neckline. Don't think this is a trade that you could do anything with right now, but important to bring these up because these are winning trades. And if you're following along, this is exactly what you would follow along for, right? Anyways, let's go to the next one. So another one we have identified that is doing really well is EOSE, and this is one that I got originally tipped off to because of I forget the exact name of the folks that do this, but they basically track either senator buying or insider buying, right? Because those have to be publicly disclosed. So back in March of 2022, there was a lot of insider buying of this company where high-level employees like CEO, CFO, or I don't exactly know the titles that they were, but they were buying a lot of their own stock, which tells me there's a reason they would buy their own stock. Like, is there a merger coming up? Is there some big, contract coming up? Like, what's the deal? Why would you buy your own stock? You would only buy that because you think it's going to do well, right? But then it proceeded to fall down. So we just kind of monitored it. We were sitting on the sidelines, just looking, waiting for it to do something. And we identified this nice downward slope. And we identified, hey, it broke up above this downward slope, did a little back test, and then broke out of that. So after it did that back test, it broke higher than this level at 183, where my cursor is right now, $1.83. That is about where we caught it. We caught it a little later than we wanted to. Ideally, you catch it off the breakout of this line or the back test. We caught it at the breakout of that back test, which is, I would say, a little more of a conservative way to do it, right? But you're basically trading, saying like, I want this to be playing out before I take my trade, but you're really losing a lot of percentage off the bottom where you could have easily got in earlier. The cool thing is about this is, even though we got in a little late, that level that we got in has held since then. So you had a nice run up and then a pullback, which happens all the time, especially when you get these massive runs. Like, you're talking about 100% gain over the past 3 months, right? So you're talking about since January when it broke up. So that level that we caught it at is actually the level that it's holding, and that is at $1.62. I caught it somewhere around there, I think a little bit early, which is great, but cool to see that this one is actually playing out, and you're actually breaking out even higher than that. So you got a nice green candle here on the daily that's rolling past your local high on March 23rd. So you're actually still ripping right now, and your next local highs, we were saying, were potentially around 325 and then $5. Like, there is nothing here. There's nothing here to stop you if you continue to go higher. So if you get past 327, you're going to 473, around $5, right? Then it gets really interesting. So if you continue on, your next stop, you got a little bit of a play at $7.45, then $10, and that's where you got the real resistance, right? Where you had the test multiple times, where you had 1, 2, 3 tests along that $10.23 level. Just for curiosity, from where we're at, not that I'm recommending you take a trade on this, like, we identified the pattern that you would take the trade on. It's a little late now, but just out of curiosity, if we were just to get to that $10.23 level, you're talking about a 300% gain from where we're at, and almost a 500% gain from where we got in. Great to see the identification of the pattern play out, and it's nice to be in profits in some of your trades, right? It's nice to see that continue to grow. But what do I do now? Well, this is the part where you need to be patient. You need to sit on your hands. I'm already in the trade. This is where you need to let these things take their time, progress, play out, because if you start trying to like sell, buy, you're gonna screw yourself over. You just want to be patient with some of these, right? So these two things, I'm patiently waiting. I have my levels identified. Maybe I want to take some of my profits at 470. Maybe I want to take some of them at 745 and some before 1023. Makes sense. There's 3 good levels to take profits at. I like that. Was there any more that we identified? Yes, there was one more stock that we identified that was playing out the way we identified, and that's fantastic. So this one we've gone back and forth with PAA. We identified this pattern. This pattern happened after you had a massive run up and a nice ABC correction pullback. Depends who you're talking to about nice, right? Like, they probably didn't like it, but it's nice for identification. You can see clearly ABC correction to this low. This low, look where this correlates, right? Back in December 99 at $5, 471, we'll call it. And it just happens to hit that same level here and start to reverse, right? What are the chances? Well, that happens all the time, where these horizontal levels are very important, and if you can identify them, you can see where things might start to reverse or start to hold or potentially break down, right? So we were identifying that we were building up higher lows every step of the way. our highs were getting marginally higher, but I would call it relatively flat, right? Not a big deal. The real thing we were looking at is like, you're building these higher lows every single time, you're consolidating, you're forming this nice wedge, and we're waiting for it to break out, either to the upside or to the downside. We were taking the upside play, and we got in early. We got in on this first breakout, but then guess what happened? It faked us out. It went back down and it said, hey, you know, I just don't have the strength yet, can't really play with the big boys yet, can't break out too far, and it fell back down. And that's why you set your stop loss, because if it's falling down, you don't want it to fall even further, and you don't want to lose more money. You can always come back and reanalyze it, take a little bit of a loss as opposed to continue to sit in a losing trade, right? Here's the thing, while we were sitting here waiting for this trade to maybe turn around again, guess what it did? So it fell back down to this level and bounced, and now we're sitting above that line where we identified our entry point. So we are again in this trade hoping that this is the time that it's going to continue on higher, right? And one of the things you want to identify with this pattern is you want to see these green candles, you want to see these continue, you want high volume coming in on the way that you're breaking out of this formation, right? Like, you want to break out this formation with a lot of green volume saying like, hey, people are buying this, there's strength behind this. What you have is a full reset on the RSI. You were down to 26. This RSI is primed and still ready to roll. Like, you are not too high to be overbought at this point. You could potentially see a nice little back test to that breakout line, but I think realistically you're breaking this one, and you will know it when you break 1350. Like, you could set an alarm right there. In fact, dude, what's going on with these ads right now? Anyways, we're setting an alarm right there, and that's going to alarm us, hey, you are actually breaking out from your local high. I mean, currently you're breaking out from the formation, but you'd really want to see break above that local high. So this is an actionable trade that you could actually get into still fairly early. Set your stop loss below this line with room to spare, right? You don't want to get stopped out too early. And we identified this pattern. We said our measured move on this would be from the low to this high, copy and paste it over here, which correlates to another almost 50% gain. So if we can identify this one like we did with GE and potentially get some gains from that, it'd be fantastic. But then on top of that, we also threw in a Fibonacci retrace from not even the highest high, just a conservative the B level, right, on this fall down. I can zoom out here to show you this real quick. So instead of using this highest high, we use this high back from February 2017, sorry. And Fibonacci, the way this works is you do a little bit of a high to your low, and then if it hits that 0.236, you know it's a valid Fibonacci. And it just so happens that we have passed that. In fact, you pass that immediately off that breakout, off that bounce. And when you see a valid fib, you could easily see this level be tested. The 382 to 50% to the 618. This is something Mitch Ray always says is the golden zone, right? Like, it is very easy to get a Fibonacci retrace to hit these levels. So we were saying that if you were getting to the 618, you could potentially see up to a 70% gain, which is beautiful. The real thing is, we're not only looking for that, we want to see a full retrace of this pattern, right? Like, we want to see you did your 1, 2, 3, 4, 5, your ABC correction. Are we turning around now? Are we ready to push all-time highs, right? I'm going to get a little bit into geopolitics at this point, but with the OPEC deal going on, I don't know if anyone's heard about this yet, but it's going to be big news where they're cutting production again. Gas prices are going to go up again. It's a pretty big identifier when you look at recessions, is energy prices always go up. There's no doubt about it that we are heading to a recession. It's just how many of cascading events are we going to be seeing in this recession? There's a lot of things that could potentially happen, and I don't want to get too far into the weeds, but you could potentially see not commercial real estate, but residential apartment building real estate collapsing. You could see potentially more bank runs, local banks collapsing. You could potentially see the destruction of the US dollar as well, right? Like that's all on the table in this recession. Potentially even the fourth turning, as they say, as Ray Dalio has been preaching, right? Not to get all doom and gloom, but if that were to happen, I do think an oil pipeline company is going to do fairly well with rising oil prices, and it would be a very good spot for this to reverse. Okay, so these are our winning trades. Now let's go into, this was just a actionable trade still, right? So this is like, hey, we're in it. This is something we just got into again. So borderline profitable, but still actionable. Like you could take this trade and be at a good level. Like this is a good early entry to take this trade. Now I want to point to another trade that is at an actionable level. So Intel. We identified Intel as being one of our prime candidates for US investment in silicon chip manufacturing, right? We know that the US wants to bring some of that manufacturing home. They're going to start pumping money into these companies. So we were identifying which companies we think might be recipients of that and might do strongly from that benefit from it, right? This important level at, we're going to call it 22 or 25.50, really 25.46. We'll just round up. This is where you fell from your March 2021 to December of last year. You had this pretty epic waterfall falling down to that level. And why is that level important? Well, look how many touches you have. I circled each one. Boom, touching it as support, touching it as support, touching it as resistance, touching it as resistance, touching it as resistance and support, touching it as resistance, support. I missed a couple. Touching it as support, touching it as support. And the last one, touching it as resistance prior to breaking out. And that one dates back to 1997. So again, these are very long timelines where it's just multiple times saying, hey, this is a very important level. Every time something happens here, it's respected. Either it stays below it or it stays above it and continues on. And what are we doing now? Well, you made this nice double bottom formation on this, and we were waiting for a breakout of this, and we finally got our breakout to the upside with a little back test on there. And you never really see a real clear back test. You can potentially see even more of a back test because you haven't really done a lot. Let's zoom in and see what this looks like on a tighter scale. Like you broke up, came back, and then continued on higher. That's exactly what a back test is. Potentially see a bigger one occur, but the real thing is like you got a nice double bottom here. I keep pointing instead of using my cursor. I'm an idiot. But you have the low here, and then the low here is at a pretty equal level. You got a little bit of an upslope, but that's okay. It just means that it didn't get as low because there's more people accumulating it. But then you get your W formation, right? Where you get the middle W, just as if you were to draw it, right? So you got a nice double bottom here playing out with a breakout above that neckline. How do you measure that? Well, you copy from your neckline to the top, or in this case in the bottom, and you paste it over here, and you're looking at a 23% gain. Again, we stacked up a Fibonacci on top of that just to see what does that look like with a 618. Well, you're talking about instead of a 23% gain, you're up to a 31% gain potentially. Not a lot compared to something like a 60, but a 20% gain is a great little trade, right? And the real thing is we want to push to this level at $43.90. This orange line that I have drawn is another line that's been really respected since November of 2017. It's been touched multiple times as support and has yet to fall below that until May of 2022. So that line is very important. It's been holding for 17, 18, 19, 20, 21, 22, 6 years that it held. So we really want to see it get above that. To that line, you're looking at about a 40% gain. Is it doable? I don't know. Remains to be seen. But what I would say is that I would be comfortable taking some profit at 23 and then some more profit at about 30% at that 31, at the 618. But I would leave a little bit right to that $43 level. Realistically, you want to bet on this play as being the reversal as well. Like, this is not the trade to make. It's actually the trend reversal that you would want to make. Looking good for a nice trade. But now we're going to get into one more that is looking even better in my book, and it is right at the breakout level. So all these charts I'm showing you right now are like actionable levels. I'm showing you 3 actionable level charts right now that you can easily make trades and like monitor these over the next couple days and see what happens. Amazon already, right? Like, who wouldn't want to have Amazon in their stock portfolio? Whether or not this is a good trade at the time, do you think Amazon is going to be better off or worse in the next 10 plus years? Well, if you're like me, you think, how many boxes have I opened up in the past couple of years? It's only increasing and increasing and increasing every step of the way. I think you're going to see a more of a shift towards that Amazon like e-commerce system, and I think Amazon is going to keep doing well considering they own a lot of servers as well, and they own a lot of the internet. Getting derailed. What does the chart look like? Well, you got a nice broadening wedge forming where you have 1, 2, 3, 4, 5 touches, which is what you need for a broadening wedge. And on top of that, you're getting a nice ascending higher lows, basically, right? So you had this low put in January, and then the following one in March of this year has been higher. And since then, you also put in a higher high since previous. I've seen some people draw this as a inverted head and shoulders, with that being the shoulder, neck, and other shoulder. But this really scuffs up the neckline, this little wick right here. So you'd have to draw your neckline up here, unless you just want to risk it right here. But either way, we're right at, if you were drawing it like this bottom formation, you're right at this breakout level. So this is the place where you'd want to take a trade. But then it also correlates to the breakout level of this broadening wedge, right? Where you're coming on to the upside of this downslope. Exactly what you want to see. You'd potentially see a breakout, a back test, and then a breakout even higher. You don't need a back test. It could just break out and continue. Way you measure a broadening wedge, right, is to the top of the formation. What that means is from where we're at, you're potentially looking at a 67% gain. Very important to be watching these charts right now. There is a lot of reversal happening across the market. I don't understand with the macro events, like when a recession is looming and some of these charts just look absolutely primed. They're lower risk entries. They're showing nice formations. Like, what exactly is going on with that? This is one I'm taking the trade on. I have not entered it yet, but I'm probably going to monitor it tomorrow and maybe into the next day. Definitely going to take the trade. Well, unless it starts to turn around, right? So that's the way we measure the broadening wedge. Let's do a measurement of your head to your neckline. Copy that and paste it to the breakout of your neckline, and you're looking at about a 22% gain, which would take you up to $127, $128. Looks good. I would definitely take this Amazon trade, right? Like, you monitor it, you put your stop loss back below this green line. Realistically, you could probably put it below this red line, but that might be a little too conservative. I would use the green line as your indicator and just let it ride, because this one is going to continue on higher. Like, Amazon is just looking so good right now, and that's kind of what we've seen. Is like, there was a reversal where energy and bank stock liquidity was looking to go somewhere else, and what place did it find? Well, those tech stocks were looking juicy because they're all at these like awesome lows. Like, at the start of the year was its low point, which correlated to like something you haven't seen since March of 20. The latest is March of 18, where you tested it as resistance prior to breaking out above that. So all that money, I feel like, is going into these tech stocks. They're slowly accumulating their positions. They're trying not to draw attention before they start pumping it. The liquidity is drying up on that, I think. Not drying up, but someone's buying it, right? Like, it's very evident that someone is accumulating a nice position in Amazon, or a handful of people are, and I am going to be one of them. All right, so let's get into some cryptos here. Very important that we talk about a couple of them. I want to talk about, for sure, Bitcoin, XRP, and Dogecoin. And then we'll look at some of the other ones that we typically do, like Theta. ICX was looking good today. We want to look at Ethereum and Litecoin as well, because those are the big ones, and Litecoin is just looking absolutely juicy for long-term trade, and I will show you that in a little bit. Something I've been reiterating over and over on this channel, but really looking good. But if you have any you want me to take a look at, leave them in the chat. I'd be happy to broaden my peripheral vision and take a look at something that I don't typically take a look at. Helps keep your skills sharp and, you know, maybe identify something that's playing out. Bitcoin. So previously we had this drawn as a nice ascending parallel channel that we had broken out above and done a nice back test. However, we were hitting that $28,000 level as resistance. And why did we have that as an important level? Well, again, you just got so many touches. Like, you got 1, 2, 3, 4, 5 touches around there. Let's round it up to 29,000. But you just have multiple touches there. Since the breakout, you've had this hold as support, and now you're coming to retest it as resistance. The big thing is you need to get above there, do a little bit of a back test, see if that floor has some, you know, stability. Like, you want to get above there, do a little back test, really push on that floor and just feel, does it have enough stability to take you to these all-time highs? To me, does not matter if we're going to these all-time highs, because if you identified it back here and got in, even where we're at right now, from there is a 50% gain, right? And if you got it even earlier, you're looking at a 75% gain, which is something you would take any day of the week. Who's not going to take a 75% gain? Crazy. But we were identifying this pattern, right? And we were saying, okay, you are on the upside of this parallel channel. Is that the right pattern to draw? Well, I don't know. You've seen a couple people draw a couple different things. For instance, I've seen people draw a nice rectangle here with a potential double bottom forming up, maybe even a triple bottom at this point. Anyone's guess is as good as anyone other's. So what we were saying, though, is we could potentially see a back test of that, which we did, potentially another back test. But even if we saw a pullback to 25.3, this salmon color line, I think you would still respect that as a nice floor, because you've just played there a handful of times. Like you did it back in February where you tested it as resistance before breaking above that. You did it back in August of 22 where you tested it as resistance before, you know, descending a little bit but eventually breaking up above that. And then you did it again back in May of 2022 where you tested this on the way down as support. So we would like to see, if it is going to fall back into this parallel channel, that you're going to hold that $25,328 level as support and continue to build higher. Does it need to? No. You could potentially see it break out above that $29,000 level. Again, we're rounding that, like it's the real level is like 28 something and some change. And a nice back test. Nice back test, continue on higher. Does not need to though, as we could take a fib from, let's get the, not Control F, Alt F. We could get a fib from this conservative high, not the highest side, this conservative high, and get to the 618 to the 50%. Again, this is the golden area, right? Easily get a retrace there. And you could potentially see another 25% gain. However, if we did take the all-time high, which our fib 236 correlates to that $28,000 level, meaning it's now valid, you potentially see from where we're at 28%, 50-ish% to a 70% gain. Which, I mean, again, who doesn't want a 70% gain? So really, really nice to see. What did I have here? We had, I'm not even gonna get into that. Anyways, Bitcoin looking good still on my chart, right? Even a little downside is not the worst thing, especially when you had a day from in March where you went on a 50% tear over a week, I think, week and a half. Really good looking. And this is going to drive the macro environment too. Like all these altcoins, they really need Bitcoin to either stay level or slowly trickle up. Otherwise, they're gonna start to lose valuation. Unless you get like a one-off like Doge, where all of a sudden you have Elon Musk posting the Doge logo instead of the Twitter logo. Like, yeah, stuff like that's gonna happen. Do I think this is an actionable level right now? Absolutely not. Like, you do not want to buy on these massive up spikes. This is the times where people get wrecked, because immediately following this is going to be a pullback, probably to around this level at 8 cents. So you're going to, from where you're at, see a nice 12-15% loss. And then what happens? You immediately sell out, because a lot of people don't have the strength in their stomach to continue on with a losing trade like that. However, on the macro, Doge looks good. Like, you are building higher lows each time. You got this massive pump up followed by another one, indicating that there's someone accumulating a nice position on Doge. It is looking good. My chart is the one from Coinbase. Let's get a different one. In fact, let's use Bittrex, even though Bittrex is going to shit right now. Same thing. And I'm gonna extend this even further and see where that lines up. Yeah, I mean, it kind of does. It kind of lines up with this pullback off that all-time high in 2021. So Doge is looking good. I just wouldn't like this position for an entry. Like, it's just not the right time to make an entry. You would have liked to see it back here, even back here, or back here would have been nice. If you do pull back to that green line, or even the 200-day moving average, that might be a nice entry if you're looking to get in and accumulate a position in Doge. Realistically, someone is. What am I doing here? What am I seeing? Just a couple of downsloping lines. It's looking good for the long term. We're gonna do just a handful more. XRP was one of them, and we were seeing this parallel channel, these nice upslope on the kind of the macro scale. So this low is from March of 2020, and we were just waiting for people to buy this, right? Like this, it looks so good for the macro scale. Like you just continue to build higher lows each time, and then you got this nice area where you're playing in there. Really nice. You're above that parallel channel now, but you're falling back. Like this is what you're gonna expect those to do, where you go up and then you kind of reset and reconfigure, get a little bit of strength in that spring, compress it, get it going before you continue on higher. Is it looking good? Yes. You're getting higher lows each time, and you're also starting to build higher highs, so it's looking great. I don't like this level to buy, but when you look on the macro, it does look okay. Your next line you need to really be worried about is 53 cents, and you just have a handful of touches there that make it an important level to play with, right? Looks good. And this is the motto of the day, is a lot of these charts are looking great. Actionable levels across the board. I said there was a couple more I wanted to look at, and let's see. T-Fuel had a nice day, 6% up, building higher lows, above the 200-day moving average, way above it. You're way above this level at about 5 cents, which is your important level that we identified, because you just have multiple touches on the horizontal timeline. You're way off the pullback level from January of 23. You almost have an inverted head and shoulders formation forming up here. I'm going to draw this so we can monitor it the next couple days. But again, you got a really scuffed up neckline where it'd be somewhere up here. This is something we were identifying a couple weeks ago. We were really looking at T-Fuel, because there's just such high potential here for this Fibonacci. Like if you were to make this Fibonacci from not even the highest high, but just this conservative one, you could potentially see 163% gain, which is just outrageous. So this is something we're going to monitor a little closer now than we even were. Just wanted to bring it to the forefront because now I'm seeing that inverted head and shoulders, and now I'm seeing it 6% up for the day, 7% up for the day, respecting these important levels, looking really good even though it's a secondary token. I don't know why. Maybe there's some accumulation happening from it, because all right, thank you, Crypto Slow Joe. Appreciate the compliment there. Maybe there's accumulation happening because there's actual utility for it, right? There's a way you can consolidate those into somewhat of a node and keep profiting from there. It seems like the inflation rate is rather low at this point. Theta is much the same, but not as bullish. So like you are just riding that 200-day moving average. You are sitting above that red line at close to $1, which is the important level that you need to respect at this point. You start falling below that, and you really don't want to fall below 80 cents or 71 cents. Pretty important levels. But let's continue on, because there is two more we want to look at, and these are the big mambas. We want to look at Ethereum. Already, don't even need to look at it too in depth. Looking bullish as heck. Got a nice upslope to this that you're broken out of, right? You're broken out of your local high from February. You're above your high from September 22nd. Really want to start pushing that high from August of 2022. And this green line at 1711 is the important line that you need to respect because of how many touches you got, like always, right? You got multiple touches as support dating back to May of 2021. You're looking like you're building the same pattern as Bitcoin. A little more toppy it's looking, but again, you could potentially see a pullback off this massive pump and not even be phased with it. Like, I think realistically a pullback to this green line, which we already did, but potentially see another one, or even the red line, and you wouldn't be too far out of whack to continue on higher. Your Fibonacci, right? You could get a 618, and let's see what that is from where you're at. Potential 50% almost gain. Looks good. And last one we're going to look at, unless someone has anything else they want me to look at, is Litecoin. And we have been building this case and this argument for Litecoin for a couple weeks now. And it is a long-term play here. I want you to look at this long green sloping line. And I use the long in terms of crypto, so keep that in mind. We're not talking about something like Intel where it's from 1997 or GE where it's even older than that. But 2017, some of these cryptos weren't even around in 2017, and this is as far as the formation is dating back, right? Where you are building higher lows since 2017. Every time you've gone up and pulled back, you're building these higher lows, just cascading higher and higher, stair-stepping every single way. This is fantastic to see on a macro scale, and you're waiting for it to just rip through here. And I wanted to highlight a couple things here. I wanted to highlight that one first and foremost. Like, that green sloping line dating back that far means that every time we're falling down, someone is accumulating it. Someone's setting that floor even higher every single time, and that's great to see. Like, that is something that is going to, on the macro scale, continue to prop this market up. Like, I'm looking at this and I'm just seeing, wow, how long is that going to continue? Because it just got retested again in November of this past year, and it's still holding back from 2017. So very important level, or very important trend line to see. But then this orange one, or I'm sorry, let's call it gold, right? At $65.20. I want you to take a look at how many touches you have. This one recently as support, this one as support, resistance back here as you were kind of falling back to this green line, resistance, support, resistance, support, resistance, support. I'm just gonna, keep circling these because it's outrageous. So this yellow line, why is it so important? Well, you have multiple touches there, but then look what happens immediately after you break out of this line typically. What happens is, well, you broke out to the upside and you get a massive run up. Okay, broke down to the downside, come back to retest the green line. Broke to the upside, you get a nice massive run up. Broke down, okay, so you come back to touch the retest the green line. Break up, what are you gonna do? Get a massive run. Then followed by the descent and then a retest of this green line. Well, we are above that yellow line, so what do we think comes next, right? A nice massive run up is my anticipation, right? So this, to me, I don't know why, but Litecoin is just looking primed and ready to be one of the winners of this early market cycle. I don't know that Bitcoin is going to push for all-time highs. Personally, I think it is. Just given the whole macro environment with the bank runs and all that stuff, plus the global reserve currency situation where China's really testing it lately. I think there's never been a more fundamental case to crypto, especially Bitcoin. And one of the things is Litecoin is a forgotten blue chip coin. It is one of those that has been around since almost the beginning, that has just kind of been there, and one of those ones that people are willing to put money into. Like when I started last year, kind of polling people around saying like, what are you looking to get into? Are you going to do some more alts? Are you going to do some more Bitcoin? What are you looking to hold during this downtrend, or what are you looking to purchase as it looks, like a low risk entry situation? A lot of people were saying, I want to get Bitcoin, Ethereum, and Litecoin. Maybe a little BNB, maybe a little XRP, maybe a little Doge for fun, and then a smaller percentage of your portfolio you play with some of these other ones. This is one of the ones that's going to continue, in my opinion, to really, really shine as Bitcoin continues on. But that is all I got for this technical analysis for today. If you have any questions on what I presented today, anything you think I did wrong, anything you'd like me to look at, please leave them in the chat. I'd be happy to take a look at it, review some of this, and just, keep improving. Other than that, I appreciate you